Welcome back to Property Playbook. We're your hosts, Alana Sarditas.
And Erica Reddy-Choquette.
And of course, we have Chris Lightham back again to talk all things about the market, but with an interesting twist. How do you invest? Investing 101, the art of investing. Let's go. Where do we start?
I think this is great because I honestly think you hear all the time, invest in real estate. And I think people go, okay, yeah, I am. I have my home. Like it's my whatever, retirement plan, my ladder, but like, I don't think people actually know how to start investing in real estate in the sense of a portfolio. You know it best.
It's great. I mean, both of you know it as well, but it really is. And right now it's a little daunting because you get the Landlord and Tenant Act. If you're talking about residential real estate, it gets pretty bad headlines right now where, sometimes, there's tricky situations for landlords to manage. But really, ultimately, it's slow and steady wins the race. And I think that's really what it's about. We were just looking back recently to 2004, so 20 years ago, and the average sale price in August of 2004 was roughly $315,000 in the GTA. And now it's roughly just shy of 1.1 million. It's $1,070,000 or something like that. So you think about that, and you're like, oh gosh, that's like almost 4 times in that time period, right? In 20 years. And that's actually normal, which is fascinating for real estate. So you think about, all right, we all are thinking, gosh, I wish I bought a house back in 2004. But in 2004, you probably had the same anxiety and issues and worries that we have today. The price looks different. But remember, incomes have changed. There's a lot of interest rates have changed. There's a lot of reasons why it's priced the way it is today. Bottom line is though you have to start. You can start with one, buy a little condo, put a tenant in there. It's not as scary as it might be, and wait, and wait, and wait. And it's slow and steady. It's not glamorous, but you look at the history of real estate over decade after decade after decade, all through those ups and downs. And here we are, 20 years later, the average sale price in Toronto in August is $1,070,000.
Wow. 20
years ago, it was $315,000.
So would you say the biggest mistake people make is they don't kind of set and forget?
Yeah. They're worried. Like, it's like, you're not looking at it like you shouldn't even look at your, stock portfolio on the daily
I have no
either,
idea
right?
what it does.
I mean, that's really, again, good old Warren Buffett, like set it and forget it, buy great stocks and wait, right?
Yeah.
I mean, that's buy great companies and 30 years later, oh my gosh, it's a pretty good story. Same kind of thing with real estate. The beauty with real estate, though, is leverage. And that's the one real key that you have to understand. Leverage and the compounding effect of years of growth, right? And so if you once you dig into that math, it really gets exciting. So you think about that person that bought a little property or any property, average property in 2004, and if they put 25% down, what is that, $75,000 down? It was a lot of money in 2004, right? Well, today, 20 years later, if they didn't refinance it to take money out along the way, let's say it's roughly getting paid for with ongoing income through that whole time period. And the tenants are still there and still paying every day, every month. And now they're $75,000 with most of that debt that they borrowed at the moment to buy it, paid for. You've now got an asset of over $1 million. And as I say, there'll be a little bit of debt left, maybe. I mean, you can actually get it done in about 20 years if you use all your cash flow to pay down.
You know what I would have said, though? I would have been like, wait, we have all this equity in this property right now. Pull the money out and buy 3 more. Or buy 4 more.
You can.
And now I don't have one property worth $1 million. I have 4 worth $1 million. And in 25 to 30 years, all of them would be paid off.
Yeah.
All of my tenants are paying me monthly, and that's my retirement.
That's it.
Hold.
Yeah.
Buy real estate and hold. There's no trick to the trade. It's just buy and hold.
Buy and wait.
Yeah, I think the hold for sure. I think the set it and forget it for sure. And I think a bit to your point, you could take leverage either way. Leverage in a conservative fashion of just, okay, I'm buying and I'm setting and I'm forgetting. Yeah. Or leverage from your standpoint, which is like, okay, every time you can pull out, look at what you can pull out, look at what you can then buy. But I think from my perspective, what gets scary for people is that cash flow piece. And I think you want to be careful, or maybe take this last run that we've had with interest and rates and mortgages to maybe say, okay, I maybe don't want to fly as close to the sun because I want to be able to set it and forget it. And setting it and forgetting it probably doesn't mean watching the balance sheet every single day going, have I over-levered?
Yeah.
Okay, but then you also have to think about it. What type of asset class are you investing in? What type of property are you investing in? If you're investing in a condo and you're putting 20% down, guess what? You're probably not cash flowing. And you only have one tenant in there. So if the tenant moves out, you're carrying 100% of the cost of carrying that condo. But if you buy what I like to buy, which is my multiplexes, guess what? 20%, you cash flow. Now, if the interest rates go up, yes, your cash flow is just a little bit less. If the interest rates come down, you're profiting a little bit more. Like, that's the type of set it and forget it that I actually enjoy.
Sure.
Because then you also leverage your properties against each other. If one's bringing in a little bit more money and the other one's not bringing in as much money, you move things around. But like, that's the kind of investing, and I call it very smart investing. It's not for everyone because you do need quite a bit of money to put down. But if you can do it and you get a 3-unit home, if one of your tenants move out, because what are the odds you have all 3 out at the same time? 2/3 of your expenses are still getting paid off.
Yep.
So that's a set it and forget it. That's kind of like, here's your conservative version. It does cost a little bit more money to play, but once you get into that kind of property, you're kind of set.
And
Absolutely.
again, maybe you start with the condo. Maybe that's your
Yeah.
stepping
but
stone to
that's
get to
your
a
stepping
multiplex.
stone.
Yeah.
Absolutely. And I don't disagree. I think there's so many amazing ways to invest, but I think some people do get nervous about how does that all work? And I mean, I feel like I talk to some people that go, okay, well, I'd invest, but I need 30 or 40% down to break even. And how does that even make sense to jump into that? And sometimes I go, I don't know, maybe you are right. So I'd love maybe some take on that.
Well, I think what we're seeing today is the cash flow is becoming more and more possible because of the change in values, and interest rates have been pulling back. So there was a moment there that was really offside for a bit. So a couple of tips is I like fixed rate mortgages. I don't like variable rate mortgages. I'm not a fan of them because you know that on day one, if the math works, the math works. You don't have to worry about you've got a fixed income, which is your rent, because if a tenant doesn't leave, unless it was built after 2018, don't want to get too far into the weeds here, but you're really only seeing a 2.5% on average annual rent increase because of rent control. But if you have a fixed rate mortgage, you're fine because it's fine. So again, conservative approach.
Yeah.
So that's one way to do it. Certainly getting in the market with one and trying one on for size is a great way to get started. And once you get comfortable with that, and if you have an appetite for more, and if you want to refinance and take some money out, and it depends on age and stage of your investing career. If you've got 30, 40 years of investing ahead of you, yes, be aggressive, right? Within reason. Because as the only time you lose money in real estate is if you have to sell, right? Because if you have to sell in whatever market you're in, you don't have a choice. You can't hold it. Well, you have a possibility of potentially losing money. If you don't have to sell, the history would tell us that prices will rise over time. They'll ebb and flow, but they'll rise over time and they'll come back.
Yeah.
And that's kind of take your time, take it easy, don't overstretch it. But it's unfortunate, I think, that, look, it's not like buying a stock where you have nothing to do, right? But you don't have leverage either. So you miss leverage on the stock, and you have to be really good at picking stocks, or you have to have somebody who's really managed your money really, really well, which there are great people out there that do that. It's a great other alternative asset, investment opportunity. But the nice thing about real estate is you get that leverage piece that makes a big difference for you over time. And it really, although the Landlord and Tenant Act right now, sometimes you're getting a bit of a bad rap, it's not. If you take care of it, if you have great people advising you.
You also hear a lot more of the horror stories than you do about the success stories.
Of course.
Like, people are going to talk about the tenant that trashed the property. They're not going to talk about the landlord that had an amazing tenant for the last X amount of years and has done great with the real estate.
I mean,
they're not going to talk about
anybody
it.
typically want to talk about very kind of
Bubbly
vanilla,
topics?
like
Yeah.
everything's good, everything's
No.
good. No, people want to hear the crazy extremes. And so, yeah.
But the best way to get started on your real estate portfolio is you buy your first property, you move into it. When you're ready to upsize, see if you can hold it. Because I think most people have it in their mind that I have to sell to buy the next. And the moment they meet me, I'm like, well, why are you selling? And they're like, because I'm buying. And I'm like, well, why are you selling? They're like, no, Ellen. I'm like, I'm going to buy another property. And I'm like, yeah, but do you need to sell to buy? And then they have to think about it again. And they're like, wait, I don't know if I do. I'm like, talk to the mortgage broker and find out. And if the answer is yes, you need to sell to buy, then let's sell to buy. And if the answer is no, we don't need to sell to buy, then don't sell to buy. So sometimes it's just about having a conversation with a professional and seeing like what is possible. Can I hold it? Can I upsize at that moment? Now, when you upsize the next time around, are you upsizing with a basement apartment? That is another form of investing. Like, how do you leverage, like, how do you make your money work for you? Mm-hmm. And if it means you get a little bit of a bigger home and you have a tenant paying in your basement, like, who cares?
Mm-hmm. And I mean, I've even seen people go, okay, I'm a little too nervous. I'm going to get the basement apartment. I'm not ready to commit to a tenant yet in my basement. I'm going to live there. Even with the Airbnb, and I know this is a whole other controversial kind of topic, but I've seen people in like, you know, a third of the year, or if they go right to the 50% mark of the year, do incredible. And then all of a sudden that gives them just enough courage to go, wow, this is incredible. Okay, how do I grow this? So I think for most, I think it's how do you step into it, because it is a daunting thing. And I think if you, like anything, go to someone and say, oh, I think I'm going to invest in real estate, 9 times out of 10 people look at you like you have 4 eyes, because they either don't know how to do it themselves, they're terrified, they've heard a horror story, or better yet, they wish they could do it, but they're not going to encourage you because they're jealous.
Yeah.
But it also is like, show them through experience. Like, it's really, really easy to help pitch investing in real estate when we're doing it ourselves. Sure. Like, when we first bought one of the houses, the one we're currently living in, I used to bring people by for tours, and Dan used to be on a Zoom call and be like, I see Chris's face. Chris is like, how is he not left you yet? No, but Dan would be upstairs, like on a Zoom call at work, and I'd be like, you have to understand the investment, because if you don't see it, you're not going to understand it.
Yes.
So I'd be walking them through, and I'm like, here's the basement apartment. When I'm done the reno, this is how much I'm going to get. Here's the main floor. When I'm done here, this is how much I'm going to get. And then I'd show them the upstairs, and Dan would literally be in a Zoom and be like, what is happening?
Yeah.
But every single person I brought in was like, oh my God, this
Now
is
I get
another
it.
version of investing that I didn't get.
Yeah.
And then I would bring them down the street and be like, do you know how much they're renting their house for? Basement, this. Main level, this. Upstairs, this. The math makes sense. And if the math makes sense and they can see it, they're more likely to buy it. But people need to know what's actually out there and see that, you're doing it. It's not that scary. And I think that was the big turning factor, at least with my investors. The moment they started investing in more real estate was the moment they saw what I was doing physically. And they saw the numbers the way that I have the numbers. And they were like, wait, this actually works. I'm like, yep, and I can help you do it too. So like, let's find some opportunity, because Dan won't let me buy anymore, and I need another project. So
All those buyers out there, listen up. You're next.
Yeah,
You're
exactly.
plug and play.
Yeah.
because I'm finding opportunities and Dan won't let me buy them.
Yeah,
So like, if you're listening to this, call me, because I at least want to see the potential of these properties that I'm seeing, as opposed to me just being on the sidelines watching them.
Yeah.
There's great opportunity out there right now, and there's different times in the market where opportunities present themselves. And right now is one of those times, because we've gone through a change in the market. Whenever there's change, there's opportunity. And it's not easy to step out and try this for the first time, because it is, to your point, it's daunting. Like, you're borrowing another mortgage. Maybe you have your own home, you're buying your first investment property. It's another mortgage you're committing yourself to.
Yeah.
And there's a lot of moving parts. But as you said, Elena, or Erica, one of you said, like, it's the small percentage of the bad apples that you hear the stories about.
Of course.
The vast majority of tenants are fabulous people who appreciate their landlords. Their landlords appreciate them. They take care of the suites. We have tremendous experience, decades and decades and decades of experience with rental properties, and we have very, very few problems over all those years. Sure, you run into them every now and again, but it's a business. And business has problems every now and again. And if you look at it that way and say, okay, well, how are we going to tackle it? You tackle it, you get it fixed up, you move on, and it really works out well.
100%. It's luck of the draw sometimes. Like, you do enough of them, and eventually one bad apple will hit. But in the grand scheme of your real estate portfolio, you're going to do well.
But it's the same if you even look to stocks. I mean, does everyone just say, perfect, I invested in the stock market, every single stock I took was perfect, every single stock exponentially went up, and I just cashed out? No. Maybe you pick a company that you take a chance on. Maybe. So you're always, I think, when you're looking at investing, however it may be, there's always bumps, there's always risks, there's always hiccups. But in the long term, and with a long-term time horizon, and with a set it and forget it model, I think there's no way to not see yourself in 10, 20, 30 years in a better place.
For sure. You think about it, like, let's just say, like, forget about price increases. Let's just say you buy a property and the tenant just pays the mortgage off for you. All of a sudden, you've gained all that equity will just imply zero price increases, right? And they've paid it off for you, and you have cash flow forever now.
Yeah.
Like that's just one simple way to look at it.
That's pretty much your
Then
worst
right?
case.
Yeah.
And what people need to remember too, when you're investing in the stock market, you're putting 100% of whatever you're investing
Yes.
into
The
it.
leverage
When you're
piece is
investing
key,
in
as you
real
talked about.
estate, you're leveraging that. You're spreading it out. You also have access to that money. A lot of people think, oh my God, I put money in. I'm locked in. I'll never be able to get that money again. God forbid, like the sky is falling. I'll never see that money. There's so many programs with mortgages that are like revolving doors. You pay money in, you can pull money out. You can refinance the property. There's 1,000,010 ways to access your money after you've purchased a property. You just have to be creative and talk to the right people.
100%.
Once again, it's Elena Saraditas.
And Erica Reddy-Choquette.
And this was Property Playbook. If you like content like this, make sure to like, follow, and subscribe.